Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, April 26, 2013. As we do every Friday, we're going over the 19 major markets we track for you at PerfectStockAlert.com so that you know everything that I know moving into the week ahead. If you watched last Friday's video, basically just assume this to be the exact same thing, only complete opposite, if that makes any sense to anybody other than me. Basically, we're looking at last week. We told you last Friday we anticipate a bounce. That bounce happened this week. Now we're telling you anticipate the peak of this bounce, and you got the signs across the markets here. We'll be showing you today, and then they'll be crashing. So it's important that you know what's going on. Last week we were looking at look for this kind of a bounce to happen, and this week we're saying look for the end of that bounce and rolling over and crashing down. It doesn't have to happen in a single day. It can take a few days to roll over. You have a day up here, and then a sell signal, then a day to the downside, another day to the downside, a day back to the upside, attempting to try to regain this lost ground. Then we start to break down. It just kind of rolls over. There's really more of that going on. In most of the cases, you'll see that again and again. And this is something that I want you kind of get used to, because a lot of times people are like, well, you know, the market's breaking down. Why are we at this level again? It's really just a great big picture of we're just rolling over. Okay. Obviously, we're going to be starting looking at the Australian market, AORD. You can see today's activity pretty clear, nice shooting star signal there. Nothing you can really do with that. I mean, it's absolutely pretty clear. Whenever you look at the market from different angles, you can say, okay, well, we have this high point here. We started to break down, taking out previous lows, so we broke through that and start to find resistance there, going lower, hitting resistance at the 50 period moving average, going lower, and then you can see we bounce up here again, and we've come up here higher than the previous high. So people might be like, hey, well, maybe we're going to change something here. Yeah, maybe, but if we were changing something, you wouldn't see this signal right here, and the reason be that you look over here and you don't see that shooting star signal. Over here you do. Over here you were able to climb higher. Over here you're not. There's obviously an increase of sell pressure that wasn't here before. Now it's way over here. So we can see that it's increasing on the sell side there, and that's why you're able to break down. So I wouldn't be looking for this to be a reversal to an uptrend market right now, especially with sell signs showing up across many of the markets we're looking at today. So how do you use this big black evil arrow that I marked with there? It's real quite simple. A blue arrow indicates that I would start selling immediately. A black arrow indicates that if I got confirmation the following day, I'd start selling. And that would be basically taking out today's low. 1 cent below today's low, the low being 5082.50. If you actually take that out even by a penny intraday, I would start selling that. Now you could do it different ways. I kept my stop up here, the previous high. This is a major level of technical resistance here, so I'll keep in that right there. Someone who didn't want to take a lot of risk would simply start trading this once you start got confirmation and keep the stop set 1 cent above this candlestick's high. It allows you to take a smaller amount of risk in the trade. What kind of confirmation can we get on the theory that we are hitting a top here? Even though we had the candlestick, which would be confirming that. Do we have anything else? Yes, we can look at the ultimate oscillator and say that whenever the ultimate oscillator hits that 70 line, that's where you start to get your resistance points. And again, we're hitting that 70 line, bouncing off it, rolling over. What do we expect price to do? Well, roll over. Quick little glance here at the Dow Jones Industrial Average. I covered these fairly well over the week, so I'm not going to go into great detail here. Overall, I still see the same basic chart pattern with this head and shoulders formation and developing here, and we're just rolling over here. Some people are looking at this saying, well, this could be bullish. We just a little temporary flag pattern here, and then we're going to take off like this. That's possible, but there's something else you should concern yourself with, and that would be the actual sell signals that you're getting on the candlestick formations here. Okay, so whenever you see that and you didn't see that before, the chart's telling you something. It's something now it's being signaled to you that wasn't before. Also, you could point out to the lower high on the ultimate oscillator here, hitting just at that 70 line and rolling over. Again, these signs are not telling signals of strength here. We have actually a very longer term bearish divergence forming tone. Let's look for a top formation. So I know a lot of people are just going to bet on the Fed. It doesn't matter what the GDP numbers are. It doesn't matter what the employment numbers are. It doesn't matter that all these companies are reporting higher earnings with lower missing on that more important revenue line. The reality is that those fundamentals will eventually catch up with this market, and the trick of a technical trader is, of course, to know the fundamentals and then try to look for the signs in the chart that tell you your time for that catch-up is fast approaching, and so you need to start catching those signs. And that's why now I'm saying, okay, I'm looking for sell opportunities. Back here I was telling you the fundamentals don't support it, and now I'm telling you start looking for short opportunities. There's a timing strategy going on here that you need to understand, and that basically comes down to the chart. What's the chart telling you? Looking now at the French CAC 40 index, this one also we talked about on Friday. I didn't show you the chart. I just mentioned that the European markets were overextended there. You need to take a look at that. Actually, that was on Thursday. And so we were looking at that then, and we started to break down here now. That makes sense to us because the ultimate oscillator overextended here at the 70 line, but you also had this massive move to the upside here, just a big overextension here. Now they're betting on some kind of a drop into the prime rate over there, basically. Kind of doing what we're seeing over here. The reality is that helps and it doesn't. And here's the caveat. When people talk about, like, whether you're talking about the U.S. Fed or wherever, they say, okay, we're gonna see them lower the rate. All right, well that's great. If your rate was at 5 a moment before the drop, when you're dropping the rate from 1 to half, you're not really doing much. You've already got the benefit you're going to get from that. So it's not a really big deal. The news may come out and they may say, hey, guess what? We're going to give a little push and cut it by I don't know, half a basis point or whatever it is, and that would be great, and news will spike, and then everybody will realize, well, the benefit from that's already in, so we go lower anyway. So overall in this chart, I'm not thrilled with this. It's not sustainable move to the upside of that news. So basically that's my argument on the fundamental side. Technical side, low point here takes out previous lows. That's very, very important. You've also come up here and you failed to take out previous highs. So what is the overall trend? Down. You get lower highs, lower lows. Looking now at the MIB, the Milan Index, and all of a sudden you can see that everything in Italy just improved. I mean, overnight was just awesome. We went from over here where we were taking out new lows, then we had this little bounce here, and we failed again, lower series of highs, and we go lower. And then everybody gets together in this G20 and they say, you know what, European markets are not doing that well. We need to boost confidence. The very next week we see this radical rally that happens because everything was better. No, they're just trying to boost confidence. They're trying to drive prices higher and at the same time do so by telling you that we might cut the rate for the European Union by so many basis points, half a basis point, and that would make everybody happier, right? Well, guess what? It's just temporary. They've been doing this for a while, and all we end up with is a massive downtrend. What do I expect at this point in time? Nothing different. I think we're just making a little bounce here. As long as I don't take it this high, I got nothing to worry about here, nothing to concern myself. I'm just watching the bounce, look for a short opportunity, and take it lower once the news is played out, because this actual trend is a fundamental trend, not a news-driven trend. So yes, you're going to have little bounces along the way. Take advantage of it. Right now, I don't see another entry opportunity. Somebody could look at that and say, okay, well, use this as a hanging candlestick formation. I'm not going to do that here. I'm already short at this point here. It stops right here. I'll just keep an eye on this. If we break out, I'll look for another short opportunity. If not, I'll just continue to watch it go lower. German DAX composite. This is again with the European Union situation here. Same thing here. Whenever you're looking at, I've talked about this before, if you're looking at gold, you want to also compare silver to make sure they're confirming one another. You're not getting just a false buy signal on one chart. The same thing kind of applies with the Dow Jones, the S&P, the Nasdaq, those type of things. And also in Europe, you want to look at Germany, you want to look at France, you want to look at Italy. All these things you play together. So always look at the charts as a whole and say, what are they all telling you? And this reality is they're all telling us lower series of lows, lower series of highs, and even in the fact that you're looking at Germany, which is supposed to be one of the stronger ones over there, they're clearly indicating lower lows, lower highs. There's nothing even here that's taking out one single high point here. You have nothing here that would be bullish. Again, overbought condition here. Everything would tell you look for this to roll over. Also, hanging man candlestick formation, a little better one here because you have the longer wick out of the bottom there. I like that. Sell opportunity at or above the 50-period moving average in a downtrend is a perfect, great sell opportunity there, so that would make sense. I would still see potential for a little bump to the upside like you've seen some other charts, so I'll keep an eye on this. If we can get a better entry opportunity, keeping my stop way up here off the main high here, and that's it. Just basically, we're still in a downtrend, had to bounce, now look for it to start to fall apart. Quick little glance here at gold. It's basically the same story we've been talking about all week. Told you that this little move here was nothing more than a little bearish wedge and overall bearish formation where you just had this downtrend here, little sideways moving activity, measured move. You're going to break down and take out this low again. So don't be buying this. Now, there's actually, we drew it a little bit different earlier this week, and then we saw this continue to, this actually didn't peak out here. We started to press a little bit higher, so we redrew it. trying to capture as many of the highs and lows as possible, and you'll notice now we still have the same bearish formation. It's just gone a little bit further. It's basically the terminology I would use if I were in a live trading situation with you guys. I'd be telling you this is a bull trap. It's a situation where bulls think that they're catching the bottom, they're going to get lucky and make all this money and blah blah blah. Guess what? They're going to get caught with their pants down. You mark my words on that. You can see the black arrow marked on the chart. Basically what you want to do here is if you get confirmation by taking out one low point here, then yes, there would be a short entry opportunity there. You could do that with a tight stop set off this high here. Another way to do that would be wait for a close below the trend line. That's another thing you talk about in the past. Whenever you want the best confirmation you can possibly get, wait for a close below the trend line, and that's the best way to do it. I also want to point out again the Ultimate Oscillator is peaking not at 70 but at 60. A bear market happens. Whenever you start to see that, you'll see this formation. Whenever you have a bear market, you'll see that we do not hit the 70 line. We start peaking at the 60 line, and that's very, very important for your overall markets. I keep telling you, you're fixing to go into a bear market. Gold signaling you're in a bear market, and people keep saying, no, we're just going to go higher forever. Looking now at the Hong Kong Hang Seng Index, a big move up here, very nice, but the problem was it was off of the all-time low from the previous one here, so we have lower lows and higher highs. Whenever you have this scenario, you're going to learn about this all day today, but the last chart I show you today will really teach you something very powerful about this. The main thing here, I just want to point out that this high point here, if this was truly no longer sell pressure, why did you just get a sell signal right there? Why are you just now indicating sell pressure at this level? You wouldn't be doing that if the market was changing. All of a sudden you were saying, oh no, we can rally for forever. Then you wouldn't be picking up sell signals. So again, you've come up above that 50 period moving average, red line right here, and you're getting a sell sign. Well, it's because people are selling there. Why? Because it's the best short opportunity in a downtrending market is at or above the 50 period moving average, and so that would be again a great short opportunity. I also want to point out, just so I make sure everybody's completely clear on this, when you're in a bear market, the Ultimate Oscillator will do what? It will go up there and cross above the 70 line. No, that's not right. It will go up to the 60 line and find its little peaks and roll away, and then again, and then again, and then again. And what's it going to do when it gets up here? Again. And what's it going to do when it gets down here? Bounce again. But we're not down there yet. We're looking for this to roll over and start going lower, so short it. Looking now at the India Bombay Stock Exchange, or the BSE, in this particular situation, we don't have a shooting star signal. We have a couple of different candlesticks. You might have looked at as sell signals, but we didn't look at that. We looked at this one as starting to set up one, expecting it to, and it didn't. It continued to move higher. We didn't get confirmation, so we didn't take it. We're just watching for a good sell opportunity, and I really want one really bad here because I haven't been shorting the BSE, but we're now back up at the levels where we've seen sell pressure here, sell pressure here, sell pressure here, and now we've come back up here and roughly to about the same level. What do you think you're going to find up there? I bet you sell pressure, and I'll bet you I'd take it as a sell opportunity if I was given that opportunity. And of course, you may see it differently, but I don't. So I'm going to sell it because it all makes sense to me. You're in a downtrend, and you're not breaking out to new highs, and you're overbought, and yada, yada, yada. Looking now at the EWJ, the Japan iShares. This one we tried a while back. We had the shooting star signal. We had the confirmation and the whole thing. Kept a tight stop on it because we told you at that time that we were doing that. There's a problem with this particular short, and that is the Bank of Japan. The BOJ is dumping in, I think it was $1.4 trillion. It's a massive move by their government. So we expected, if the markets were in fact peaking when we said it was, and globally, that Japan wouldn't stand alone. And that's already get a little bit of a pullback here. But we told you, whenever you get a bounce in the markets, this one's going to get hurt, and we probably get stopped out. And that's exactly what happened. Now we have an opportunity again, signaling shooting star confirmation. You could take this again with a tight stop right here. You know what? I wouldn't. It's just too easy to get make money in other charts. This chart here is going to give you problems every time we bounce, and so I would just leave this one alone. I know I'm a pansy. I've got stopped out one time, and now I don't want to play the game anymore. I know. It's just me personally. If you want to, I would understand why you're doing it, but you're still trying to call a top here, and this one hasn't actually broken down. European charts already broken down, showing lower series of highs, lower series of lows. Japan and the U.S., most of those are still in the uptrend, so that's important. A little piece of the puzzle for you. If you're looking to short, it's easier to not call the top, just let the top happen and then get involved once you have a downtrend already in play. We have some U.S. markets already done that, but some of them haven't, so keep that in mind. Quick little glance at the FTSE or the London Financial Times Index. You can see we have the hanging man candlestick formation after a nice move to the upside right here. And that's fine. And a lot of people are going to look at this different ways. You could say that this is a low point here. You start to make this move here. Lower series of highs, lower series of lows. Everything was in a downtrend right there. Then you came down here and did not take out the previous low. And so you take off to the upside. Someone could argue we're now seeing an uptrend here. You can see this right here, higher highs, higher lows. That looks like an uptrend, right? That's fine. You could do that. The problem is that I don't think it's going to hold, and that's why I didn't take it on the long side. A lot of times in your markets, you'll learn about this later. You'll have massive sell-off until you get to a substantial oversold point, and then you eventually have to have a reactionary move back in the other direction. But it's still, the overall trend is still lower lows, lower highs, and that's the thing that you're betting on as being the real big story there. You're going to have little moves here and there within it, but the overall true story is lower, and that's what I'm focusing on here. The week before last, I should say last week, because this week is still this week. So last week, we actually went over the long-term charts of the U.S. markets. We showed you that we were breaking down in most of them. We hadn't broken down yet in the S&P and the Dow Jones, but we had already in all the other U.S. markets. And that's important because it shows a long-term structural problem, and we're breaking down there. And so we expect the short-term charts to start to show the exact same story. And we're seeing that with the NASDAQ. You can see this in several others, but you'll see here, we took out the previous low here. That gave us a lower series of lows. Then we come up here, we took out a previous high. That gave us a higher series of highs. You need to learn about this particular pattern. Whenever you see this, it simply means sideways moving activity. When you have both indicating they're moving lower, then you have a lower trend. When you have them both indicating up, then they're both indicating up, then you expect to go up. But when you have them conflicting like this, then you know that the moving is only going sideways. And markets don't move sideways for very long until they do something. They're simply moving sideways and preparing to shift. It's basically like neutral. And then all of a sudden something changes. What changed here? Well, downtrend stayed the same. The uptrend changed. That's the thing that you're recognizing here. We already showed you the longer term charts showed that we were breaking down the uptrend line. So whenever you look at that and you can start to see what you're seeing here on the short term chart, what do you think you should do at this point? Obviously it's a sell, right? Because the trend is now down. You get the sell signal, confirmation, bounce off the 70 line, blah, 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 blah. Quick little glance here at the XOI oil index. This is pretty clearly defined, the same signal that you would expect to find. You've got this low high, then this lower low, this lower high, and this lower low, and this lower high, and then what comes next? That's right, a lower low. Quick glance here at the UUP, and this one I'm just leaving alone. We talked about before on a longer term chart. It looks to me like it needs to pull back. I attempted that back here, and she just kind of slowly rolled over rather than doing it the way I wanted it to. And now we're starting to pick up some momentum here, moving lower, taking out all these lows, and also making a lower high here to here, and now we're moving down here. That's fine, but at this point I don't want to play, so I'm just going to go and look for some easy money somewhere else. The Russell 2000 Small Cap Index, and that's a pretty clear chart. I mean, seriously, I will wait and you can draw it for yourself because this is pretty easy. Lower series of highs, lower series of lows. That's it. Basically, once you have that understood, you understand that you're trading with trend. What do you do here? Well, what do you think you would do here? It's pretty clear, right? All right, look for this to take out this low down here and start to test this low down here as well. Looking now at the SPX, or the S&P 500 Large Cap Index, main thing here. Look at this right here. High point, low point, lower low. When you have that condition, you know that you have a sideways moving market until something changes. Right now, we have this bounce up here, taking a lower high from this point to this point. Has something changed? I believe it has. What will come next? You'll probably come down here and take out this low. How do I know that? There's no hammer candlestick formation there. Quick little look here at silver. Basic, same overall story, a false start like we saw with gold. We just saw this little movement here. We saw that as a breakdown here. And then we had this amazing, miraculous little, no, wait, we're going to go this way. Okay, watch and see how far it goes. It's not going to go very far. Bouncing off this, the 60 line here on the ultimate oscillator. That's where you find your peaks before, where you'll find them again because you're in a bear market and you're going to go lower. Looking now at the TSX, the Toronto Stock Exchange, this is one that you can benefit or trade if you think gold's going lower. I've been focusing on the Toronto Stock Exchange. They always follow gold really well, gold and silver, so it's important to keep in mind. On this chart, I've wanted to take this on the short side anyway, and we talked about this before. You were getting a sell signal at the 200 period moving average. We told you that is very bearish. It indicates a very bearish market, not something that's bullish and you should be looking for a bottom and none of that stuff. This is telling you look for more selling to the downside. Then you get this massive move lower, and again another sell signal, and then you go lower and you bounce because you get oversold after so many massive moves to the downside. Eventually that just happens. You get a bounce and you come where? To the 200-day moving average, where you used to find support. Now you've broken below it, close below it. Now you're finding resistance there. Makes perfect sense. And then you get confirmation we're rolling over here off the 70 line. What would you do with this? Well, you're in a downtrend. You're hitting off the 70 line. You're getting rollover signals. It looks to me like a sell opportunity. Looking now at the volatility index, also known as the VIX, this runs the inverse of the S&P 500, the opposite thereof. So whenever the S&P 500 is bullish, the VIX should be bearish, and vice versa. In this particular case, we're seeing a bullish trend on the VIX, which means we should be seeing a bearish trend on the S&P, which we are. All these things tell us to look for sell opportunities on the S&P and buy opportunities on the VIX, or ETFs that track the VIX. And so that's the most important thing, is make sure your charts are confirming one another, and they all are telling you the same thing. Run for the woods. It's like the end of the bull market. Basically, it's screaming it to you. Quick little look here at the EMW, the Wilshire 4500. The only thing that is not on this chart, which I would have preferred, is the fact that this isn't much of a shooting star. I would have liked something a little more clear. You don't have to have them, though, so it's important to note you didn't have one over here when you peaked out, so it's not a requirement. But that's the only thing missing from this chart, so everything else is in line. You have this major little move here, and you get higher highs, higher lows, and then you don't. You get lower lows right here. Something's changing, and you still get a higher high. All right, that's good. You're still doing this. So basically, you're getting mixed signals. It's telling you something's changing. Pay attention. What is it going to be? Lower lows, that's not changed. We're still seeing lower lows. And we come up here, and what has changed? Lower highs. And do you know what's coming next? I wonder. If you've not been to the free website at perfectstockalert.com, you're really missing out. We're actually going to be tarring and feathering random politicians on the website this weekend. It's not true at all. But if you're looking for the website, it's right there, 100% free. All we ask in return, refer a friend. Also, any of those charts that you'd like to look at and get my annotations from and see the little marks I play, it's on the chicken scratch, you can go here to the markets and nightly market analysis videos, or the market charts themselves right here. My own charts right there, updated every single night. Also, anything that I've discussed in the videos that you didn't understand, any technical principles or anything like that, we have a tutorial section here of the technicals as well as fundamentals. But the technical section will give you video by video showing you every single thing that I know about technical analysis, so that you will know what I know. God bless, take care, enjoy your weekend, and I will see you on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.